So, a very good evening to all present here. Yeah.
Yes. Good evening.
Am I audible? Are you able to hear me?
Yes. Yes.
Yeah. Okay. A very good evening to all present here for this panel discussion on bank nationalization to privatization, the antecedents and the repercussions. I am Anubhuti Singh, Coordinator, Department of Banking and Insurance of K.A. Shroff College of Arts and Commerce, Mumbai. Before we embark upon this intriguing journey from bank nationalization to the quite imminent privatization now, I would take this opportunity to let our audience know that this is the final day of our Bank Nationalization Day celebrations, which was actually a 3-day bank fest. The Department of Banking and Insurance had organized a quiz competition called Banquisitive on 16th July, in which we had more than more than 100 participants. On 17th, we had a competition called Printvertise, which brought out the creative side of the students who created print ads for certain bank products. And now today is the culmination of this bank fest, where our department
Hello, Anubhuti.
discussion for which we are fortunate to have very, very esteemed panelists with us. Uh, before before we introduce the panelists to you, I would like to welcome our mentor, a very dynamic personality, our principal, Dr. Bhushan, who has been instrumental in encouraging us all to help student community to be able to directly ma'am.
Okay, your voice is not
lagging. Yeah.
Yeah. Okay, so is it my turn?
To unmute her, sir?
Yes, ma'am.
Or
yes.
Okay.
Madam Principal, it's your turn.
Yeah.
Yeah.
Okay.
Yes, ma'am. Yes,
very pleasant good evening to one and all present here. At the outset, I must welcome our honored guest, Mr. BANERJEE, Mr. VISHWAS UTAGI, Mr. K. Ishra, and Mr. Divesh Ishra on this very fruitful session on bank nationalization to privatization, the antecedents and the repercussions. Coming to the nationalization part, I must admit that whatever we used to study in our syllabus about nationalization, I strongly believe that nationalization has done good for the economy. So far as branch expansion, deposit mobilization, penetration of the banking system, it was Mrs. Indira Gandhi's, our ex-Prime Minister's dream, her effort to nationalize the banking system, because banking was a prerogative of a few rich entrepreneurs and landlords, and banking took up in India from the southern part of the country, and the landlords and the agriculturalists had become bankers, and their loans were available only to the privileged few. With nationalization, lending increased in the agricultural sector, cooperative banking system increased, and I think it has done more good than harm. That is my very own personal view, and it has definitely led a helping hand in the economic development of the country, be it agriculture, be it industry. So I am all for nationalization. But of course, there is always a flip side to everything. There are pros and cons of nationalization, but definitely that time when nationalization took place in 1970s or 60s, I think that was the time that we were more of a socialist economy, and nationalization was the need of the hour because it was catering to the masses. And today we have branches in every village, remotest village. Accessibility of banking loan has increased, and of course the other flip side is always there. But today again, it has taken a U-turn and we are back to privatization. So that time only will tell whether it is for the good or for the bad. And we have our honored guest today, and we'll listen to them as to what is their view. And Mr. Divesh Ishra is there for moderating the session. So I'm sure we'll have a wonderful time enhancing our knowledge on nationalization to privatization. Thank you very much for being with us here today.
Thank you, ma'am. And this is an honor actually to be on the same dais, same stage, where eminent people like Mr. Robin Banerjee, Mr. Utagi, okay, and Mr. Ishra are there. So, with the permission of the eminent panel, with the permission of the faculty people, I will just.
Sir, I would like to initially like to introduce the panelists also before that.
Please go ahead. Yeah, sorry.
Yeah. Thank you, sir. Yeah, thank you. Thanks, ma'am. Thanks a lot. Actually, I think you have set the tone for the discussion already. So I'm sure you all are looking forward to the intellectual brainstorming session. So let me request to introduce the panelists. Let me request the head of the Department of Business Economics, Ms. Nandini Katti, to introduce the panelists for today.
Yeah.
Over to you, ma'am.
Yes. Thank you. I will deem it my pleasure to begin the introduction of Mr. Robin Banerjee, who is a qualified CA and is currently the Managing Director of Caprihans India Limited. Before assuming this position, Sir has occupied designations of being Managing Director and CEO of Arcelor Mittal at Germany for 5 years. Sir has also served as the Executive Director of Thomas Cook. He has remained the CFO of Essar Steel Suzlon India Limited. Sir has to his credit many awards and has been nominated as the best CFO in India by Business Today. CFO 1 among the 100 in 2010 and 2012, and also as a corporate leader by the leading newspaper DNA. Sir has authored 3 books in the subject of indirect taxation and is an acclaimed speaker and writer for various journals, magazines, and leading newspapers. And sir, I would like to tell you that your newspaper blogs, I see to it that I read and I don't miss. So with these words, I welcome you, sir. I also take this opportunity to introduce Mr. VISHWAS UTAGI, a very dynamic person who always speaks his mind very clearly. He is the ex-secretary of All India Bank Employees and ex-general secretary of Maharashtra State Bank Employees Federation. Mr. Vishwas has been the ex-director of Bank of Maharashtra in the year 2000 to 2003. He has also remained the convener of Trade Unions Joint Action Committee for Maharashtra, General Secretary for Nivara Abhiyan Mumbai, and convener for Jana Andolananchi Sangharsha Samiti, and the convener for Save CKP Cooperative Bank Kriti Samiti. Thank you, sir, for being here, and it would be a pleasure to hear from you. I now hand over the floor back to Ms. Anubhuti Singh.
Yeah, thank you, ma'am. Great to hear about our panelists. Really, we feel really proud that we are going to hear from such big wigs. I would like to introduce Mr. Koti Kalapudi Ishwar. Mr. Ishwar has recently retired as a senior advisor, corporate and international banking and taxation, Indian Banks Association, where he has been for almost 5 years since 2016 until recently, till his retirement. He has been at the forefront at IBA, being interface between the regulator and member banks on policy-related matters concerning corporate credit. He has also represented Indian Banks Association in the International Banking Federation in its tax working group and attended meetings in Paris and Brussels. He was part of delegation of Indian financial sector at Moscow for a meeting of Indo-Russia Banking and Finance Working Group in the year 2019-20. And he has held the position of General Manager, Corporate Credit, International Banking and Treasury at Central Bank of India, and has had a long career of 40 years with a string of success stories in operational banking, rural banking, Treasury, and international banking in the Central Bank of India. He's an alumnus of Stanford Business School and Asian Technology Institute of Technology, Bangkok, and XLRI Jamshedpur. He is a certified associate of Indian Institute of Banking and Finance, CIIB, and has also authored several articles on like risk management, corporate credit, and marketing in leading journals. We are really very, very happy to have you here, sir. Welcome, sir. I also would like to introduce Mr. Divesh Ishra. I think the students of our college do not need his introduction definitely, but yes, like a formal thing to do. So Mr. Mishra, he has been instrumental in changing lives of many students, and he's helped them aim high and also reach those heights too. He is the founder of Ursa Minor Consulting Private Limited, and this is a company which deals with training and upskilling in the BFSI sector. And especially the aim of this company is to make the educated yet unemployable youth job ready. And I think the company is surely helping students in utilizing their full potential there. Mr. Mishra has held the positions of Vice President, National Sales Manager, and National Head at HDFC Bank, with which he has been associated for a long 20 years. He has also worked with State Bank of India and a multinational bank also. And he's an alumnus of Garhwal University, IIM Kashipur and Ahmedabad, and of NIBM Pune. He is a certified associate of Indian Institute of Banking and Finance, CIIB, and he's also authored a book on banking, a beautiful book like called Simple Guide to Banking, and this is based on workplace training method of banking as against the classroom method. A very, very interesting read. I feel privileged to welcome you, sir. And sir is the moderator of this panel discussion also. So now without any delay, I request Divesh Ishra sir to take the lead and start the session. Over to you, sir.
Thank you. I'm sorry I jumped the gun. Okay, so please.
No, sir.
Tender apology. So thank you, Robin sir, for joining. Thank you, Vishwas sir. Thank you, Ishra sir. There have been very few incidents in the history of India, of our country, especially post-independence, which have left such an indelible mark as the nationalization of the banking sector has been. I mean, I remember that when in 1983, I was being interviewed by State Bank panel for State Bank of India PO exam. I mean, I cleared that written, and this was the first question which was put to me. Are you in favor of the nationalization or are you against the nationalization? Arre baap re. The first question, I don't know. I must have satisfied them because I was made to join. Okay. But then this continues. Some of my students, those who cleared the main in 2018, two of them were also asked the same question. So there are very few things which have left such a, say, irascible mark, okay, on the Indian economist in the minds of eminent panelists and things like that. So with this, I will put my first question to Mr. Ishar actually. If Mr. Ishwar is listening to me, and okay, so the question is, sir, what do you think that nationalization in 1969, when it was introduced, and I'm not going into the political angle at all, okay, when it was brought in, it was told in the parliament that, okay, there were three main objectives behind it. One is taking banking to the underprivileged. And in those days, almost everybody in India was underprivileged. Okay, that was a time of shortages when you didn't get anything, neither ration nor drink potable water, nothing. Okay, so it was to be taken to the underprivileged, especially for loans. Number two, branch expansion in the hinterland, in the deeper geography, and faster growth of the economy. Sir, has the bank nationalization achieved these purposes in your opinion?
Yeah. Thank you, Mr. Divesh Ishra. And at the outset, I thank KES Shroff College Management for giving me an opportunity to be part of this important discussion on a contemporary subject, bank nationalization to privatization, the antecedents and repercussions. I think being associated with the banking industry for over 4.5 decades, I have seen closely the various phases of the evolution of the banking in India. And today being the 52nd anniversary of the nationalized banks in India, the discussions woven around the current topical issue are well timed. To look into retrospect as well as the present day developments in a wider perspective, I have eminent co-panelists to discuss the important subject with me today. In order to articulate properly my response, I need to go little in retrospect, the backdrop of the nationalization of banks in India. As a first step of Union government towards entering the banking space, it was in the year 1955 when the Imperial Bank of India was nationalized and SBI was constituted. Pre-1969, mostly commercial banks were owned by industrialists, and mostly these banks were directed towards large and medium industries. Connected lending was also prevalent in many banks because these were owned by the business houses. Banking habit among the rural masses was very limited, and series of failures of private banks were seen in those days, mainly in small banks and which were localized, not in all India basis banks. Then we could see the regulated powers of the Reserve Bank of India were limited as per the provisions of the Banking Regulation Act 1934. Bank branches by and large were mostly in big cities, and there was absence of reach of banking services in small towns, in villages, rural areas. As a first step I remember in December 1988, banking law amendment was passed, and the scheme was known as a social control over banks to ensure optimum growth rate of economy, which is inclusive of all the sections of the society, SSI, agriculture, and self-employment to gainfully employ the large unemployed youth was actually need of the hour to support the true self-reliant India. And banking services are lacking in vast areas of the country, particularly rural and suburban areas. I think these were the main challenges before the government, which prompted the government to take the steps to nationalize the 14 major banks in India on 19 July 1969. Purely driven by the need to ensure the reach of the banking services to marginalized and weaker sections of the society and the rural and semi-urban areas with special stress on agriculture and small-scale industries and towards self-employment generating venues. And by 1986, more banks were added to the list. The number kept increasing, but after a series of mergers and acquisitions, today we are with 12 public sector banks, including SBI. Now, to answer the question which Mr. Divesh Ishra has very aptly put, that did the bank nationalization help in achieving the objective? He has said three clear objectives. My answer is, in candid terms, is yes. Because I see the impact we can see in terms of the expansion of the banks in unbanked centers, bringing 84% of the bank branches under government control post-nationalization of both the two branches. This allowed citizens to avail bank services throughout the length and breadth of the country, regardless of their income level. I remember I was working in 80s in a remote rural branch in Uttar Pradesh when I was working in Central Bank of India. And I could see that how effectively the plans for development were drawn right from the village level, escalating it to the block level, escalating it to the district level, then state level plan, and which was finalized in state level bankers committee meeting, which is by and large chaired by the chief minister of the state, and which are implemented again through banks with very effective monitoring mechanism where the district magistrate, district collector, all are involved very seriously. And so I have seen that how these were really helping in achievement of the socio-economic objective. Let me tell you one small example. When I was there, I thought in that district, we thought that why not to gauge the impact of these schemes, that how it is impacting. To our surprise, we found that one small initiative we did, we thought that let us see that because we were doing under the socio-economic schemes, IRDP, one of the schemes, integrated rural development post-nationalization. And we wanted to see whether the cattle population in our district was increasing or not, because every Wednesday I used to go to the cattle fair, stand there with my borrowers, with the sellers of the cattle, buyers of the cattle, help them buy there, help them insure the cattle there only. So we wanted to see whether the cattle is only exchanging the hand, or is there really an increase in the cattle population in the district. And to our surprise that after the IRDP scheme stabilized, a series of these cattle meetings we attended, all the banks collectively, we financed, a lot of cattle came from Punjab and people bought there. So in real terms, in quantitative terms, the number of the cattle increased. So I'm just giving you one small example where how the nationalization and post that these developmental schemes, which were with all seriousness with the involvement of the banks, the block level officials, district officials, state government officials, was implemented. So that was the major achievement. Then we had the credit guarantee scheme and deposit insurance schemes, which encouraged people to approach banks because your deposit started getting insured with a very nominal premium which bank used to bear. Then nationalization saw the massive expansion, as I already said. Then inclusive banking was very important, that where all sections of the society were attempted to be covered with banking services, bank lending through numerous schemes, be it the, as I said, IRDP or rural, means the host of the rural development schemes. It did result in the green revolution in the country, major contributor. And then this was a sort of the availability of the institutional credit to the large number of people who were earlier deprived, and now it's a positive sign that they could access the bank credit. So in short, I would say that the social causes dominated the nationalization phase, which was very much needed. Then we had the reach across the breadth and length of the country. And then you saw the ancillary services in the forms of the insurance related products, channelizing through partnerships. Then we had the financial literacy and inclusion, which was the hallmark of the public sector banks. So with this brief achievements which I saw in my 4.5 decades of the association with the public sector banks, I can with confidence say that public sector banks have provided wholesome banking services to all the categories of the customers through its vast network at affordable cost, helping banking penetration and bringing huge population of the country to the banking fold. Over to Divesh, sir.
Wonderful, sir. Wonderful. I mean, in such a lucid and such a, so you have given such an unhindered view of what you say sort of experienced, and it really refreshed all my old memories in my mind. And exactly what you did, sir, the same thing actually in maybe slightly lesser extent, I also faced and I also did. Okay. Now the thing is that what my view is, though it matters the least here because I'm a moderator, but my view is that every country has its own macro and micro economic requirements and flavors. Like say what is good for United States may not be good for India, or what is good for China may not be good for us because the political scenario, the genetic, say DNA is different in both these countries. But my question now to Mr. Robin Banerjee is that with these requirements, which are often dynamic and tend to change from time to time, in the current scenario, what is the banking sector requirement of the nation, sir? Which way it should be going for a greater growth of the nation's economy? Towards privatization, towards public enterprise, or should it be balanced? So this is my question to you, Mr. Banerjee, and over to you, sir.
Thank you, Mishra ji. Thank you, everyone. This is a very vexed question. As Mishra ji said that when he went for the first interview, he was asked the first question that are you in favor of privatization or nationalization? I think it is same today. Even if a banker is or a youngster is going for an interview, or as the same question will be asked, and maybe they're expecting privatization as an answer. Way back in 30 years before, the expected answer was nationalization. So how things change. I would divide our issue into two parts, the past and the future. And as students of economics, we will not talk about politics because political mindset, whether it is socialism, communism, democracy, autocracy, or monarchy, every political system will have some economic activities or economic vision around it. But we will talk in terms of students of economics. As regards past is concerned, the bank's nationalization have surely delivered value. Why is it so? What is the job of a government? Essentially, the government has 4 things to do. 1, to provide currency. That's what government does. Number 2, national defense. That means so that outsiders don't attack us and we remain independent country. And that's true for every country in the world. Number 3, law and order. No one can rob us, no one can kill us, no one can murder us. Having said that, the 4th task of a government is to provide infrastructure. Private sector never creates infrastructure. It's always created by the government. And in terms of infrastructure creation, nationalization of banks is what the government delivered. Now, how is it that? Because India is a different country. It was unbanked. As Divesh said, most of us were underprivileged. And therefore, someone had to go to the rural areas, which is very difficult for normal people to go, to get banking delivered to the masses. And that's infrastructure. If a villager, if a town does not have a bank branch near him or her, how will he or she make his savings or her savings, and how will she or he deposit? There was no internet banking those days. So that the fourth arm of government's task is to create infrastructure was delivered by the nationalization of banks, because that's how the government banks could extend its tentacles and go to the unbanked areas. That's past. Let's look at the future. What should we be doing? What does economic science say for the future? And I would like, because most of the students here are students of economics and commerce, I would give you some numbers so that you can yourself, all of us who are listening to it and shall perhaps listen to it in the future, can make up their mind as what is India, what is that India should do. Most of you are aware that India has about 100 lakh crore outstanding in the banking system. It's about 95 lakh crore. More or less, that's a total outstanding debt or advances in the banking sector. As you know, the Indian economy is about $3 trillion. We have about 250 lakh crore, of which 100 lakh crore. I'm rounding up the numbers because it's easy to remember. Out of this so-called 100 lakh crore, officially, ladies and gentlemen, my dear friends, about 10 lakh crore is a non-performing asset, which means 10 lakh crore loans given will never come back. This is the situation. If you go to the World Bank estimate, this figure will be about 18 to 20 lakh crore, because even the accounts which have been restructured in the recent past under various schemes, 60 to 70% or 80% also shall become bad, and we may not come back. So why is it relevant? Let us assume for the time being that 10 lakh crore is 10 lakh crore loans given by the banking sector is non-performing asset. That means it will not be recovered. What is the business of a bank? The business of a bank is to get deposits from you and me, which is either fixed deposit, savings deposit, current account, and then lend it to the business community. The business community then uses that money for their business and returns the money, the principal and interest. The interest in there used to incur the cost of the banking system and then give it back to us by way of our interest for our savings which we have made. Now let us assume for a moment 10 lakh crore does not come back, and we know that 10 lakh crore is NPA, non-performing asset. Where will the money come from? If 10 lakh crore does not come back, where will the money come from? Now, before you discuss that, out of this so-called 10 lakh crore, ladies and gentlemen, more or less, 90% of loans are from the public sector banks, 10% are from the private sector banks, which means when the public sector banks have lent, many of it, the percentage of non-performing asset of loans given from public sector banks are significantly higher than NPAs from the private sector banks. Now, assuming for a moment, these loans do not come back, what will necessarily mean that the depositors like you and me have to be paid back? We are not going to say that, okay, you have not recovered the money, you have gone for social cause, it is fine, no problem, you don't have to return the money. That's not going to happen. Your money has to come back. And therefore, the government has to return the money. Now, where does the government get the money from? Government does not manufacture money from the air. There is no tree which can be shaken and got the money. So necessarily, the income of the government, which you know is about 35 lakh crore per annum, that is the budget size this year. This money, of just for information, out of this 35 lakh crore, this 21-22, the budget has a deficit of 12 lakh crore, which means the government of India is going to earn about 23 lakh crore. Now, this 20 to 23 lakh crore, 10 lakh crore of that, if at all they have to meet in 1 year, has to be going back to the banking system to return your money, which means the money available with the banking system towards energy, water, education, infrastructure, all that, health, which is very important nowadays, the government will not be able to spend. For your information, ladies and gentlemen, in the last 6 years, the government has already pumped in 3 lakh crore, 3,20,000 crore to be precise, as equity, which means the banking system was in shambles. Public sector banking system was in shambles. Please do not take it negatively. These are facts, and I'll come from economics point of view. I have nothing. I'm neither a private sector banker nor a public sector banker, but as state on economics, we are talking future. Past obviously it has worked, no question. We are talking future. 3 lakh crore has been invested as an equity. From where did 3 lakh crore come from? The income which the government has made. 6 years, in 6 years, 3 lakh crore. That means every year is 50,000 crore. Just for information, ladies and gentlemen, in this year, for the whole of the country, government is going to spend 75,000 crore, 75,000 crores toward health improvement in an year which is the COVID year. Therefore, if 50,000 crore has to go towards the banking system, then the health sector cannot get 75,000 crore. Or for matter, water. The government is supposed to spend 42,000 crore on water. Water cannot be spent. So essentially speaking, I'm making the matter simple in the sense that if the banking system has to be invested with the government money, something has to suffer. Either water or health or education or defense, something has to suffer. The question here is that today the situation has come that whatever the reason could be, and I will tell you, I would try to tell you what I think is the other reasons. The loans given by the banking system, essentially the public sector banks, because we are talking about privatization, many of it, and today it stands at about 10 to 12% NPA percentage, as opposed to a private sector bank's NPA of about 2 to 3%. The higher NPA percentage necessarily means that the money of the citizens of the country, the taxpayers' money, your and my money, have to go to plug this hole which the public sector banks have created. That's the reality. Now, the question is why has it happened quickly? Quickly is that I know Ishwar Saab and Mishra ji, please do not take it otherwise. I think the ability to evaluate a big loan or some good loans was not always present with the rank and file of the public sector banks. So it's all a question of evaluation. When I give a loan, I should be able to evaluate the risk and evaluate of recoverability. If I'm not able to do so, I obviously would take a bad decision. Number two, influence, because it's a public sector bank, it's owned by the government influence would have already also made a decision making. However, what has happened is the public sector banks are definitely given the accessibility, and therefore the rural India has become singularly banked. Having said that, what's the way forward? The way forward is accessibility has happened. Now accessibility has to enhance. With this new technology, branch banking is no longer relevant. Now accessibility need not be through an opening of a branch. The fintech companies, now there are hundreds and thousands of fintech companies which are getting actually created almost every day, they are going to give the accessibility. So my submission is that as we go along, in order to protect the wealth of the nation and to protect the money which the taxpayers are paying, rather than plugging the holes which perhaps may continue to be created through the public sector banks, if we hand over the business to the private sector, chances of this hole, there will still be a hole. There's no question NPA will be there. No question, it can't be vanished and it will never be vanished, but it will come down significantly. If the bank is not owned by the government and the bank is owned by the private sector, the government has no responsibility to plug the loophole, plug the hole. Therefore, your and my tax money will never be diverted for a bank's inefficiency or a bank's non-performing asset. It is said, in short, it is said that government has no business to be in business, and banking is a business. It was correctly done. The business was correctly done. When Air India was launched, the HPC and BPCL was launched, that was a time when the government was creating infrastructure. With the creation of infrastructure, that is the basics of it, wherever feasible, government now must protect its hard-earned money now for real infrastructure development and not for the development of businesses, which perhaps can be handed over to the private sector. Historical evidence shows that wherever the private sector handled banking, they have done a better job. But yes, India needed the public sector banks. They have done a fantastic job, no question about it. My first bank account was with Bank of Baroda, and I still have the bank account. I will never give up because to me, it's my Lakshmi. But having said that, will I now have a second bank account in Bank of Baroda? I'm not too sure whether I will do that. But the fact of the matter is, it's a vexed question. It has pros and cons. But at this juncture, I feel the future now belongs to privatization and not for nationalization. Thank you, ladies and gentlemen.
Thank you, Robin.
Sir, please, may I interrupt? Mr. VISHWAS UTAGI sir has joined. Sir, welcome. If you could please start your camera, then we could get you on the forefront. Yeah, thank you.
Thank you so much.
VISHWAS sir, most welcome, sir. We were all waiting for you with bated breath. I understood you were in some press conference, sir. So I hope that.
No, I was an IBM Lokmat.
Okay, sir. Okay, welcome, sir. So I was just responding to Mr. Banerjee. See, the thing is, when we listen to a person as erudite as Mr. Banerjee, I mean, the flawless speech, it's not the speech that attracts people like me, the lesser mortals, but the numbers which he remembers and the numbers which he gives. And I also heard his budget speech in the same KS college, I think 2 years back, and was mesmerized. It's not some flattery, sir. I mean, at 61 years of age, I think I have lost that art of flattering people. I used to flatter, but then not anymore, sir. These are the words which are coming from the deep of my heart. I really, whatever I say, it will be less actually. So thank you very much, Robin sir, that okay, you say sort of enlighten all our students, because these students will be going today, tomorrow, the day after tomorrow for some or the other interview, either in the private sector or in the public sector. And the thought-provoking questions are asked in the interview. Interviewer always grills. So thank you, sir. Now, my next question is to Mr. VISHWAS UTAGI. I hope, sir, I have pronounced your surname correctly, because, this is the family name and, I don't want to mispronounce it. Sir, in 1980, with over 80% of banking business in government hands, okay, after 69, it reached some 75%, and some minor 6 banks were also nationalized on 16th of April, 1980, taking the number to 20. And then 81-82% of the entire banking business came into the hands of the government of India. So it had virtual monopoly of this industry sector, sir. So, sir, what do you think, sir? In your opinion, was this a natural corollary कि एक दिन तो ये होना ही था कि private sector को आना ही था? It had to be thrown open to the private sector, because the balancing is the act of nature, sir. I mean, you can't have just, say all the time sunshine, and no night. The life would become, say sort of miserable. Similarly, if you have only rains and nothing other than rains, then also life will be miserable. So what's your take on this, sir, actually?
See, the banks have started expanding only after the bank nationalization. That is a fact of life. And more particularly after 1980, they have expanded like anything till the time this liberalization process has unleashed through the National Committee recommendations. Now, banks have even grown even after that. The salient feature which I want to quote, even when Narasimha Rao and Manmohan Singh government were talking about liberalization and also the privatization, still the Manmohan Singh government, Manmohan Singh as a finance minister, made various statements saying that the banks will go to the market, no doubt about it. But at any given point of time, government shall retain more than 51% ownership. At any one point of time, we will never dilute it. That was the statement made by Prime Minister Narasimha Rao as well as Manmohan Singh. I believe this is a good politics and this is a good economics. Now, the public sector banks which have been nationalized, 1955 is the State Bank of India Act converted Imperial Bank into the State Bank of India. 1956 the LIC, and then 69 is a watershed in the banking industry. 14 banks have been nationalized, top 14 banks. So after 1980, another 6 banks were nationalized. And now this 1970 Act and 1980 Act, this is the backbone of the bank nationalization along with the public sector banking of State Bank of India. Now the question is, this is undergoing a change in this parliamentary session. Now the question posed by my earlier speaker, it's a question of how do you look at it? I have grown with the public sector. You have also grown with the public sector. The question is, the people of India have been benefited with the public sector expansion. Now, public sector has got a policy which has been enunciated in the parliament. And there was a discussion, and therefore the Planning Commission, parliamentary procedures, Reserve Bank of India, all put together, we have brought about the green revolution, white revolution. We have helped the small and big industries, even the corporates. Then we have helped the all that agriculture, and we have also thought to it that service sector given the good relief from the public sector. Question is, world over, when the changes are taking place, the changes have taken place in India after 1990. So that is a impact of the globalization decision. But then the importance of the public sector as a mass banking, as a social banking, and not the class banking, it remains in India. So that's why I say that for everything, the panacea is the privatization. I humbly state that even today, I say I don't accept that position, not because I'm a union leader. I tell you, I have worked on a board of Bank of Maharashtra during 2000-2003, and I have opposed many RBI policies where I say that one-time settlement is a structured corruption. There are so many, even asset recognition company, the way it is now, bad bank is going to be taken. I mean, it is going to take place now. It is going to be washing away the bad loans of the big corporates. Earlier, corporates were shouting for the small retail loans going bad. Now, for last 10 years, it is only the bad loan arising out of the default of the corporates. Now, these corporates are getting exit path after 2008 financial crisis from the US. And my earlier speaker was saying, but let me quote, from 2006 to 2021, I can say that 1,000 private sector banks all over the world have collapsed. The Goldman Sachs survived, but the Lehman Brothers was killed. Similarly, even Royal Bank of Scotland was saved by the respective countries. Now, my point is, bigger banks, multinational banks collapsed after the international financial crisis. In India also, ICICI Bank was shaken in 2008 crisis. Government of India, without Government of India help, ICICI would not have been survived. That's why I always say that these two good private sector banks, initially they were good private sector banks, but today you can only call them as India-born foreign banks. If you look at the ICICI, its a foreign stake is more than 51%. HDFC is also similar way. So they are India-born foreign banks. So far they were good banks, but hereafter, when many big multinational banks will come, I'm sure there will be danger to these good banks also. And as it is, their bad loan portfolio in India is growing. As everybody is saying, the bad loan portfolio of public sector banks is growing. But why there was no recovery? My direct question is, recovery laws in India were always weak. They were lopsided. Even the Surface Act, though it was very good, bankers never use it to recover their bad loans. And nowadays, the IBC and NCLT, where I get only 20 rupees out of 100 as a banker. So according to me, this is not a good recovery law. And this is exit path for the defaulting corporates. And that's why you look at Suzlon, you look at Videocon, you look at Bhushan Steel, you look at Essar. Everybody is happy with this kind of a law because they are not. And here, who is the loser? Loser is whether it is the public sector banker or the private sector banker, because it is the people's money which is there in the private banks or the public bank or the cooperative bank. Depositors are the loser in this process of a bad recovery laws. There is no good recovery law in India. So according to me, the public sector should have been expanded, strengthened in the interest of mass banking, and privatization is not a panacea for all that ills, which is also there in the public sector bank. Public sectors is a necessity of India because in 69, it was entirely private. Today, poverty alleviation has taken place to a very little extent. It should have gone up. Today, when I look at the CMI report, today when I look at CSO's statistics, I feel very bad that public sector banking should have done much more to the rural population, to even semi-urban population. Though they have expanded, they could not do much. Point is, bad loan has not been recovered. And of course, the RBI policies, the government's policies, that is also faulty. And now, for everything, sell out is the slogan. I think that is dangerous for Indian economy. Now somebody says that income taxpayers' money is being spent on the subsidization of capital. I'm sorry to say, it is not the only income taxpayers' money going to the Treasury. It is indirect tax money of a huge population of the working people, maybe small or big, maybe urban and metro. They contribute largest share of India's tax. And therefore, it is not the only rich who pays the tax. Every small person pays the indirect tax. And therefore, taxpayers' money is wasted. This kind of a concept I don't accept. It is a government bank. Government has got every D2 because they are the owner. And nothing wrong that they subsidize, because for almost 30 years, they got the good dividends from the public bank. And after last 7 years, I say, first 4 years, they were in loss. Now, last year, they have shown profits. Today, Bank of Baroda is in loss, but then Bank of Baroda is a very good bank. State Bank of India, at one point of time, showed losses, but now it's a very good bank showing good profits. Why this should be damaged? Punjab National Bank is a good bank, but because of Nirav Modi-like clients, they have been protected by this kind of a government. We should raise the voice against such willful loan defaulters who are abroad and who are also insider. Instead of catching them, instead of recovering their money, we are killing our own banks. That is a wrong ideology. That is a wrong policies. And that's why I'm saying that private banks world over has failed. Public sector banks after 2008 recovered. They showed good profits. Today, government do not want them. And that's why when somebody is saying, Prime Minister is saying that government has got no business to do business, I say, yes, you have got business to do business. Let me quote one book, which is it's a book written by all the corporates in India in the 1948. It is known as a Bombay Plan, submitted to the Nehru government, saying that Mr. Prime Minister, you please develop the infrastructure because we don't have enough capital with us. It is the duty of the government. So, plan was the of Indian corporate requesting the government, then government, post-independent, that you please develop the economy by developing the infrastructure in agriculture, in industry, in service sector, so that we can flourish. And I think that is a guiding principle for planning commission also. Recently, I have read this book. One was the advisor for Dr. Manmohan Singh. He wrote about this book, and very recently that was published. There they say that the development of Indian economy based on that Bombay plan was more correct. So that planning commission, when this government is converting into a Niti Ayog, and virtually it becomes a small club for the private corporates, I think privatization of the banks, private of the insurance, privatization of the coal is going to be a disastrous path which India is going to take. And that's why the point is, public sector has given the strength to the Indian economy so far, so good. But now, if everything, including banking, is to be privatized, then the new model, which is of present government is talking about through the DPAM, I think that model will weaken Indian economy further. Not only weaken the Indian population, which is keeping 160 lakh crore rupees in a banking system, their money is not safe. 5 lakh rupee insurance premium is a very hollow slogan. Indian depositors are facing a big risk of losing their money. Maybe big companies, maybe rich people, maybe small people, their money is of their precious value. It is earned money for them and it is a national wealth. But some party, if they think that we can just hijack it, then it's a crime on the part of the government. I'm using the word crime. It's a very wrong policy. It's a very bad policy. If you do not protect the public money, then it's a wrong policy. That's why taxpayers' money and all these theories, I don't believe. I'm a little bit harsh, but I'm a very practical banker. I'm not just a trade union leader, but I look from an ideological point of view also. So I still stand by what the Bombay Plan was talking about. For me, Bombay Plan document is equally important as of 2021. So I feel that there should be a dominant public sector banking. There should be private sector banking. Yes, there should be a new kind of banking also. But let us not encroach the space available for the public sector banking. Let everybody flourish in India. And that is the beauty of India.
Well, thank you, sir. Thank you, Vishwas, sir. Now, here was another opinion, and I will tell you, dear students, because, this seminar actually is not about, Vishwas, sir, about Robin, sir, or about Ishwar, sir. This is about you. So you should be exposed to various viewpoints, and that gives, different dimensions to your mindset, to your thinking, thought-provoking ideas, which are food for thought. So thank you, Vishwas sir. But one sentence of yours resonates in my mind, and I have also been a public sector banker.
Yeah.
That yes, public sector banking could have done much more than what it has done. And when you are a very sensitive person, when you look towards the masses, rural masses, and you find that they still don't have a bank account, they still don't have a 10,000 rupee overdraft facility that they could weave the basket or something, or make paper bags and sell it. So then your heart, heart comes to your mouth, sir. I'm there with you, absolutely with you, sir. And then I have everybody's permission, I suppose, to have my question to Ishwar, sir. Ishwar, sir, are you there, sir? Can I pose my next question to you, Janab?
Yes, I'm very much here, sir.
Thank you, sir. Okay, my question to you, because you have seen banking and all its facets at various responsibilities, and especially the Treasury, the Forex thing. Okay, what my point is, why was there no major nationalization after 69? Okay, in 69 we had insurance corporations, we had coal, and so many things were nationalized. I don't consider 1980 nationalization of those 6 very small banks as a major thrust. This was nothing actually as compared to, because this was just 4% of banking. Okay, so my question, sir, to you is that whether the successive governments became aware that this was not the way forward. And these were all socialistic governments, whether Charan Singh's government, whether Morarji Desai government, or whether later on, whatever the government came till this thing. Why there was no further nationalization of various this thing? And do you think that this was a mistake, sir? I mean, this is something which is a very provoking question. You have been a public sector banker, but then I think you are in the best position to answer that, sir.
Yeah, thank you, Divesh. Before I respond to your question, I think I'd like to compliment Robin, sir, because I was very keenly hearing him, and being a non-banker, he has really, it was amazing to hear him, that the way he has analyzed the causes of the NPA in public sector banks and its repercussions and impact. I fully agree with him, though there are some structural issues around it that maybe that we can discuss it later, but I really appreciate the way he has analyzed, and it's a really matter of concern. And I also appreciate VISHWAS UTAGI, because he has brought a different perspective when he talks about the recovery system in the country, which contributes to the poor credits in the credit portfolio in the banks, or the indirect tax contribution being a major subscriber to the national exchange. So he has brought a new perspective, and I really appreciate the new perspective. So having said that, I would like to answer you. But before I answer you, definitely my answer on your last part of the question, that was nationalization a mistake, my emphatic answer would be no. I would say that the nationalization of bank was rather a right decision at a point of time. And policies are often dynamic and should change from time to time. They cannot be same at the throughout the period of time. So policy need not be stable. It has to be, I feel that policy should be reflective of the changing socio-economic aspirations of the people, and also the contemporary development needs of the society at large. So what is important is that the objective for which policies are framed or amended, and in that context, what business enterprise ownership model, what we are discussing, it chooses, and then it harnesses and implements. So I feel that in 1969, that was the best model, because we wanted to be a self-reliant country. We were just taking off. We were an underdeveloped country. We need to create the infrastructure. We need to penetrate into the rural areas. Banking, we have to see that it reaches rural sector. Agriculture in a big way, we have to develop, because for the self-sustenance, so self-dependence. So these were compelling causes for the policy at that time. So I say that yes, at that time the policy was right. Not necessary that the policy would continue to be right throughout, because it will be changing. As I said, that it will be reflective of the changing socio-economic aspirations of the people and the developmental needs. So after independence, you would have seen that the making India self-reliant was objective. So the state ownership was envisaged, very rightly, for attainment of these objectives. But now the banking ecosystem has matured. If we consider subsequently, it has matured in terms of the product range, in terms of the technology, in terms of the reach of the people, places besides the convenience it is providing. And we have now the several institutional players in this space. We have the regional rural banks, we have the payment banks, we have the small finance banks, we have the cooperative banks, we have the foreign banks in India, either operating as a subsidiary or as a branch, full-fledged branch, or an independent local subsidiary. So and then we have NBFCs, microfinance institutions, and then fintechs in a big way, as Robin sir has said, the fintechs are every day adding. So objective of the reach of the people and far distant places is now also adequately covered, notwithstanding what we thought that only public sector banks would be providing. Over a period of time, the situation has emerged in with these all players also coming into it. But having said that, I think the financial reforms of 1990 has changed, particularly the government thinking in favor of allowing the entry of private sector into the banking space. One of the positive effects of the financial sector reform is the competition. So entry of the new banks in the private sector in after 90s has intensified the competition in the Indian banking sector. Then we had the reforms and evolving developments in the banking sector, which instigated the discussion of the ownership of the public sector banks. So the question was whether the government should own banks, whether the ownership of bank is needed to be mandated, lending, financial inclusion. So was it required? So I feel that in the revised emerging scenario for ensuring financial inclusion and delivery of the banking services across the country, ownership had limited role. Mandated lending, financial inclusion could be achieved even through regulatory guidelines, which all the banks, irrespective of the ownership, need to follow. So this, my answer is specific to the current times. I'm not relating it to the period of 1969 when the public sector was justified. And then when banks are, whether banks are owned privately or by government, I think the regulation or supervision are one very important key issue which I feel for the better performing banks, because regulatory capability is plays a very crucial role. And particularly when we are going to the mass privatization, like what government is taking steps now, I think the regulatory capability will have a lot to do in the such situation. And then the benefits of the financial reforms in terms of the, when we say globalization, liberalization, and privatization, which encouraged private ownership along public ownership of the banks. So in a nutshell, I would say that nationalization was well thought of in late 60s as appropriate policy measure considering the then prevailing circumstances. And those circumstances change now in the backdrop of the financial sector reforms. And any further need for nationalization was not felt. So that is what I feel precisely that in order to respond to your specific question.
Thank you, sir. In fact, I am also of the same opinion that at this point in time, nationalizing HDFC Bank or ICICI and Kotak would be highly counterproductive. So thanks. And really, I appreciate that, okay, you said it was at that point in time when we go back, suppose if we could turn the clock back, it was the right decision. This was something which even Robin sir said that the infrastructure can be created by the governments. Robin sir, with due apologies to you, I just want to say something a little bit, say sort of I'm, I'm thinking aloud that neither the private sector nor the public sector develops infrastructure. Sir, money develops infrastructure. Because I was reading today that the best 5 institutions of this country were built by Jamshedji Nasirwanji Tata. And I wasn't aware. I mean, I'm sorry that my general knowledge all of a sudden became so pathetic. That Indian Institute of Science, that was created by J.N. Tata, and I didn't know that. I thought it was created by Nehru. And yes, we all know about the Tata Memorial Cancer Hospital and everything, and TISS and TIFR, but certainly not about the best education institute in the country. The best infrastructure towards higher studies was created by a private sector. Anyway, Robin sir, my next question to you, Janab, if you allow me. Okay. Robin sir, are you there?
Yes, sir, very much.
Sir, my next question is to you, and I think, like me, many people here in this gathering would like to, be enlightened again. Sir, what impact you think that nationalization left on the Indian economy in the long run? I was reading, actually, I also did some Google search, that from 69 to 91, banking sector grew only at a meager rate of 4%. And banking sector contributes around 10 to 15% towards the GDP of the economy. So when the banking sector is contributing only 4%, naturally India grew at a Hindu rate of growth of 1.52%. So my question to you is, sir, did we become a closed society after nationalization? Did the international community lost faith in us? What happened? What impact it was? Okay, and then can we link it with a high-speed growth which the country enjoyed post opening up of this economy in 1991? Now we don't think about 1%, 2%. Now we think about double-digit growth. So did it have a negative impact internationally and on the psyche of the industrialist कि यार हम तो कुछ भी करें, हमारा तो एक ना एक दिन कुछ ना ये तो हो ही जाना है, सही होना है हमारा. So sir, we want to hear from you because you are managing a company of a private sector, pretty leading company.
First of all, Vishwas-ji, what you said is absolutely right. Ishwar Sahab, of course, is amazing, and Dinesh-ji, you are doing a wonderful job in asking the right question to all of us. See, we have to think money as water. Water finds its own level. Money also finds its own area where there is maximization of wealth. Now, when a government invests money, government does not think of maximizing the money further. But when a private sector invests money, the private sector is thinking, हम कहाँ पैसे लगाए जहाँ ये multiply होगा. So this is the difference, crucial difference, Vishwasji. With due respect to you, I know you people have done fantastic for our country, and the country where we are is because of people like you. But sir, as the times go different, as the times go by, as the world develops, technology develops, we need to think. A time has come to think a little different. Let me explain to you what I have in mind. As I explained to you, sir, the country's tax revenue, direct and indirect tax revenue, to round up for you is 20 lakh crore. 22 lakh crore is budget this year, but let's look at 20 lakh crore. That is the only earning government of India has. Sir, government has some businesses where they earn about 2,000 to 3,000 crores of dividend, but the government has to spend 35 lakh crore. उसका इनकम है 22 लाख करोड़, एक्सपेंडिचर है 35 लाख करोड़. कहां जाता है एक्सपेंडिचर? डिफेंस में, फूड सब्सिडी में, हेल्थ में, वाटर में, पानी में, हर जगह में जाते हैं. इंटरेस्ट में, टू पे इंटरेस्ट ऑन द पास्ट बोरोइंग्स, दैट आल्सो सक्स आउट 8 lakh crore, sir, just for information. Major money goes, no, sorry, 2.5 3 lakh crore. Major money of the government of India goes to interest payment of the past. Now, we as a nation have to think, if this is the money I have, where do I utilize that money? Government's job is to utilize the money for the welfare of the society. And the welfare is maximized if my vaccination is done. It's all of us get vaccinated. As you know, government has already kept some 3,500 crore away for that. 35,000 crore, sorry, 35,000 crore for that. So the government's money available is minimum, and we need to spend in an area where the maximum social welfare can be garnered. Should it be vaccination? Should it be an education institution? Shouldn't be a dam? Shouldn't be a railway? Should it be a road? Or should it be a bank? Now the question is, why shouldn't be a bank? Because there is private sector people who are willing to put up banks. So when private sector is willing to put up bank, let them put up the banks. Private sector is willing to run an airlines, let him run the airlines. Humko Air India kyun chalana hai? If government, private sector wants to put up a hotel, let him put up a hotel. Humko government sarkar ka hotel kyun banana hai? So wherever the private sector, as I said, water finds its own level, wealth also finds its own. Whenever the wealth is available in an area where government need not invest, money being static and constant should not be done. The only thinking, sir, perhaps Vishwas, you are thinking, but the government can create money. Sir, government cannot create money. Government can print money. The moment the government prints money, which indeed they are printing this year of about 11 lakh crore, what happens? The inflation grows, deficit financing grows, and all the economic students will understand. And the country's risk profile goes down. So when the industry goes and continues to borrow, they have to pay a higher rate of interest. I don't want to take an economics class, but the question is that if I have a salary of, let's say, 10,000 rupees, I as an individual have to think, where do I spend? Should I go for buying chocolate? Should I go and invest in education of my children? Or should I fritter away in my alcohol? So it's a question of where do we use my money? Government has the same, sir, government has the same problem today, or for the matter, every government has all the time the same issue. If I have a set of income, where do I use it? So the thinking today is, if the government can avoid spending and the private sector is willing to spend there, let us encourage the private sector to spend there. So today it is a time has come when the government has to really spend on health, education, water, sir, is a big issue. We don't have water. The country does not have water. Country needs gallons of water, tons and gallons of water. We don't have water. We have to convert the seawater into drinking water, which is hugely expenditure. Rather than putting up a bank, rather convert the seawater into drinking water so all of us can drink water, because money is constant. I know I have walked into thin ice. Pardon me for doing so. But having said that, as students of economics, of all of us are, as it stands today, there is, to my mind, when the private sector is willing to get into banking, I would repeat again, government has no business doing business.
Sir, thank you. But again, one question, sir, this thing, slight humble reminder. You think, sir, nationalization close the doors of the industry, India's progress towards the Western society?
Not at all, not at all. Nationalization let India progress. It was the right move. I hats off to the government at that time. They could have decided somewhere else because there was a lot of protest against nationalization. They nationalized the big daddies of the Indian industry. They said, nothing doing, I don't care. You are nationalized from tomorrow morning. And that's how they nationalized the coal, or Coal India Limited came into existence. They took the right decision. But now with the new technology, now with the new money requirement somewhere else, we need to think differently. Now we need to have the guts to say no to nationalization and say, okay, Mr. Private Sector, you're willing to come, chalo, let's go ahead and do it. I will give you the ecosystem. The government now needs to give it the ecosystem so the private sector is happily investing in that sector. So that, sir, Vishwas did mention the insolvency banking code is not working. The insolvency system is not working. World across insolvency banking system works the same way, which is Chapter 11 in US. It works more or less the same way. It is just a 3-year-old legislation, sir. It has to develop for the last. Have you ever realized that today the Indian industrialists know for the first time ever since 2018, they know that if I do not return my bank's money, a company can be auctioned off. Till 2018, no industrialist ever thought so. Uska baap ka right to have take the loan and not return it. Today, it's no longer so. Insolvency banking code, auctions of the company if you don't pay. Did Essar still ever think they will become Arcelor Mittal still? Never ever. Did Bhushan still ever think they will become Tata still? Never ever. It is because of insolvency banking code, which has changed the way Indian entrepreneurs have looked at bank debt.
Thank you, sir. Thank you so much. Now we come to the final question, sir, and this question requires you people to become the crystal gazers. So this crystal gazing is open to all the 3 eminent panelists, and I want that, okay, maybe perhaps everyone can pitch in or something. The question is, sir, what does the future hold for banking? Would there be balance between the public sector and the private sector? I mean, that people are talking about a balancing act that, okay, both should survive together. Or would the banking is likely to be only and only a private sector domain, the way it is there in the United States, where I understand that Rothschild own even the Fed. I mean, this was some news to me. And they used to, yes, own Bank of England at one point in time during the war, the Great War. And later on, they had huge, this Jewish family, which is supposedly the richest in the world. Now, or will it go beyond private sector, as the times are suggesting, into the fintech era? So this is an open question of, to all the 3 of you, sirs.
Okay, I can start.
Thank you, sir. Thank you. Thank you.
Yes, going forward, I see a scenario where public sector, private sector, and even fintech all will be together operating, collaborating. Today, we see that banks within them, their collaboration is limited to consortium lending or some risk sharing issuance of the non-funded facilities. But I visualize going forward that the collaboration will be to a very large extent. I would not be surprised that going forward that two banks or fintech together share a platform for collection of the checks or the bills. So I think every area I see the collaboration. That is how the win-win situation for all of them. Because to supplement the formal banking institutions, banking spaces already stepped in by many NBFCs, fintech companies, to fill the gap. We see the alternative technology-driven credit lending models by the MSME, which are in a big way today become popular, including for the personal loans. So they are using the path-picking technology like big data, AI, artificial intelligence, data analytics, and they can handle very large volume of data and speedy assessment of the financial requirements of these segments. So we are seeing the phenomenal change in the way the lending process is going. They are also reaching to the type 3 and type 4 centers. So the alternative platform model is creating a lot of difference. So to compete, even the banks have introduced the 59-minute loan model, all the public sector bank, they have floated, and it's doing phenomenal work. So that is what I feel, that the non-banking entities are cooperating as well as competing with the banks. So either as the technology service providers to the banks or directly providing the retail electronic payment services. So even in the payment systems, if you see with the NPCI, IMPS, BHIM, Bharat Bill Pay, all this into the fray, the retail payment scenario of the country has changed substantially. You are seeing the revolutionary changes in the way it is operating. You be it with the P2P lending, for which RBI has given the master directions, the payment banks, or the invoice trading by the fintech companies, then the trade receivable platforms, trade receivable discounting system, which is doing a phenomenal work in terms of discounting the trade receivables. You have the account aggregators now gradually stepping into. So we have to strike a balance going forward, subtle balance between effectively utilizing the fintech while minimizing these systemic impact, because we have to also consider what kind of a risk it can bring into the system. So that's a very important thing here. So in my opinion, what I feel that going forward, there will be greater collaboration between all the players in the banking system, ecosystem, public sector banks, private sector banks, fintech, and each will supplement and complement each other players. So this is my brief observation.
Thank you, Ishra sir. Vishwas sir, I want to have your take on this. The question I will repeat for your convenience. So whether there will be sufficient space for all the three rather here, public sector, private sector, and the fintech. And maybe after a few years, there could be something greater than the fintech also. Or there will be some different scenarios, sir. I want to have your viewpoint, Vishwas sir.
There is enough space for all the four sectors.
Okay, sir.
My point is, public sector should have the commanding heights over the banking system, because that helps the economy to stand tall. This is my premises of entire proposition. Now, technology is a key change which is happening in last 20 years. Technology is changing this decade, not only this decade, next 5 years very fast, because it will be a sort of a digital technology. So in this context, private sector, public sector, every sector is undergoing a change. And in that scenario, public sector should command this technology and spread the wings into nook and corner of this country. So wealth generated in the economy should be under the control of government. Public sector means government banking, and then they can use these resources to strengthen the economy, which will help all the three sectors, that is industry, that is service sector, and that is agriculture. So question is, the resource mobilization has to be under the government control by operating the technology at the highest level, by utilizing the manpower, and resource mobilization is the most important key factor. So therefore, I prefer the expansion of the public sector, a good recovery system of the bad loans, and technology should take all the products, good products, to the people of India. This is what I am expecting. I do not want that the role of public sector should be minimized. Let there be a equal playing field for all other sectors. We should not encroach the opportunities for others. But then today what is happening is that I am helping private sector banking, I am helping private sector corporates to snatch my wealth. That is a very wrong thing, and that is exactly the complaint of the common people. See, you have a right to grow, but you should not be allowed to snatch my wealth and then allowed to grow. This is exactly the point of contention. So therefore, I firmly believe what the government says, I don't go by that. My point is, what is good for the country, that should be accepted. That's why I'm saying those who brought the freedom to the country, they brought good ideas for the development of economy, and they said that there has to be public sector, there has to be private sector, there has to be cooperative sector, and that's why those things should live together for the good of the country. So wealth of the nation should be under the government's control, natural resources should be under the government's control for the good future of the nation. I believe that company, I know that every 5 years, governments are bound to be changed, this government or that government. Today, I feel that there is an encroachment on the public sector banking, public sector insurance. That should not happen. Let the private come, let them challenge, let there be competition. But then encroachment of each other's area should not be allowed. And this is being done. Autocratic state is doing this. And this government, if it survives, then this is a bad thing for the economy. It goes, then some ray of hope for the country. And I stand by that kind of view.
Thank you, sir. I mean, you said that, okay, all the core areas, in fact, I forgot cooperative banking. Okay, and now there is a minister for cooperatives, actually. So that is another. So we can't forget that. So dear students, keep in mind, now you have a new ministry just invented. Amit Shah is the new minister for cooperatives. Okay. So what Vishwas sir's viewpoint also, we got to have it. Now, final word, Mr. Robin Banerjee. But before I request Robin Banerjee to say something on this, I have one nagging question, which maybe, say sort of may not be suited to, a moderator like me. But my question is, before the nationalization, wasn't this all the property of some individuals? That is the question. I mean, we talk about as if somebody has snatched public property or government's property. This property never belonged to the, it's like, say, I got a flat, somebody comes, government says this is ours now. And after 20 years, when my son wants to claim that, they said, no, this was not yours. Now this is public property. So what happened to the private enterprise? This is just, I was thinking aloud, sir. I mean, because so Robin, sir, I request you to speak on this, the final, this thing.
Vishwasji wants to say something, Diveshji.
Okay. My point is the wealth of the nation is underground also and overground also. Natural resources is the nation's property, and therefore it should be under the control of a nation. So that is my stand. And from that point of view, I was explaining nationalization was good, banking nationalization was good, steel nationalization, coal nationalization, insurance nationalization was good, and that has helped economy to grow. But let there be a private sector also. But today, if you want to grow the private sector and you are snatching away all the natural resources, using the government power, using the politicians, then this is the bad for the country. Governments may come and may go, but it is a people's wealth, it is a national's wealth, which government has to protect.
Noted, sir. This point noted. Thank you. Yes, Robin, sir. Over to you.
If I look into the future, in 5 years' time, I think there'll be only 2 to 3 public sector banks. That's all. In 10 years' time, there will be no public sector. The reason, as I said, as you all also said, that since 1969, after the big nationalization, why did the governments continue not to nationalize? Because nationalization means that you have to pay for somebody's wealth. And as I said, that this is an area where private sector wealth can fill the vacancy, and the government's ability to develop technology, adapt and adopt technology would be limited. And this is going to be a technology-related world. Branch banking may not exist in 10 years' time. Chances are that it will not exist at all. So if I have to look in the future, 5 years' time, only 3 banks, I think. And if I have to name them, I would just try to make a guess. It would be SBI, PNB, and Bank of Baroda is what I think. All the banks will get consolidated under these 3 levels. Names, 10 years down the line, these 3 banks will also get privatized. So I do think in 10 to 12 years' time, we're looking at branchless banking. We're looking at private banking. We're also looking at completely technology-driven banking. So all those who are thinking that I shall be employed in a banking system, please be aware that it is a technology-driven banking and it is not accounting-driven banking anymore. So if you are very good in debit and credit, doesn't help. If you're very good in technology, it will definitely help in a big way.
Sir, thank you so much. I mean, you really did the crystal ball gazing, and technology will be the big scene stealer. I agree with you. And this is already a scene stealer where the companies which are just barely 4-year-old are being valued at 20-30 billion dollars, and the companies which are in existence for 200 years or 100 years are just 8-10 billion dollars. So with these words, actually, as my say, with in all humility, passing it on, the baton is now going to
Diveshji, I just
Anubhuti.
wanted to supplement one point here. Just
Sir,
if
sir,
you
please,
permit.
sir. Yeah.
Robin sir has said that in public sector banks have are lacking on the particular their deficiencies in loan evaluations or the underwriting skills. I agree. What I feel that to remedy that, there has to be some structural or systemic changes, because now government is already considering setting up of a DFI, development of financial institutions, where the large projects loans will be processed. But what I feel at the individual banks also, particularly in the public sector banks, unfortunately, there is a government policy of the job rotation and compulsory job rotation, CVC guidelines that nobody can be in the same city, same department for n number of years. So a person working in a corporate credit or the treasury goes to a rural branch and vice versa. A person from the rural or semi-urban comes back to the corporate credit or treasury. So this kind of a issue arises, that the skill gap is a very important thing that arises. Then to remedy that, I feel that public sector banks must ensure that the specialized jobs like corporate credit evaluation, risk assessment should be only centralized, like private banks, ICICI Bank or HDFC Bank. No branch will accept a loan proposal. It goes directly to the central office where it is processed, because they are fully equipped. I think the public sector banks, some banks started following, but they need to more seriously follow this, so that the particularly the large credit or the medium credit, this assessment is done at a centralized level, and branch is only doing the operational banking. I think one of the causes, which in my experience of 40 years, is that the skill gap, as Robin sir has very rightly pointed out, that there is a lack of this skill of the evaluation of the risk in a loan proposal, and which is basically a structural issue which I feel the public sector bank should address. Thank you. That was my brief submission.
Thank you, Ishra sir. Thank you for this added information. And now I think Anubhuti ma'am or Nandini ma'am should open the question answer session for the students. Ma'am, over to you.
Yes, so there are a number of questions, very, very interesting session, I would say, and there were a number of questions that we had which have already been answered, a number of questions which we were having in our mind, and while you all were discussing, a number of questions have already been answered absolutely brilliantly. But yes, there are a number, there are a few questions which the students and the other participants have also put up here. There's a question by Mr. BNS Ratnakar. Do you think boards of PSBs have played their role expected of them? The boards have played the role of public sector banks. Have they played the role that was expected of them? I think there has been a talk about it.
So I think Vishwas sir was in a board actually of Bank of Maharashtra. He, as I understand from the introduction. Vishwas sir, this question can best be addressed by you, sir.
Basically, when the privatization is the main theme of this government, and a bill is pending, a bill is coming up to, from today to 13th August in this parliament, where the public sector banks are going to be changed and modeled into the Companies Act 2013. In that case, all the nationalized banks will come under that. Number one, in that case, the IBPS role or Indian Institute of Banking Finance advertisements will undergo the change. As you rightly said, that technology is going to have a key role to play. So there won't be any common bank employee or a common bank officer required. All will be required only specialists, and IBPS or IIBF will be recruiting only the specialist bankers for which there will be demand from the new owners. And the new owners, we don't know who will be them, but then they will have to decide how many existing people will be required, how existing people will be sent home, and which kind of a new people are required. Everything will be decided with the change of ownership of the banking system. So I don't see any big role for the IBPS. I don't see any big role for IIBF in the change constitution, because technology is going to play a major role. So I stop here, and there won't be much recruitment as generally it happened so far. But hereafter, it will be a specialized recruitment, and therefore, as we look at everywhere, there won't be many job opportunities. It will be very few.
Thank you, sir. Ma'am, I hope that the student's question was answered and he or she responded to you. What about the next question?
This sir has like talked about this after Rucha Rane. She's asking, after privatization, the job opportunities will be increased or decreased. Sir just actually talked about it.
I have said decreasing.
Yeah.
I already mentioned decreasing.
Yes, sir has already talked about it. Yeah. Then there's another question which has come up here, and that is if, there's question has been taken up. Jay has given a question that if banks are going for privatization, will the bank's coverage of rural area be affected by that? The coverage of rural area by the banks, will that be affected by privatization?
Should I try to respond if you agree? Anubhuti, ma'am?
Sure, sir, definitely.
Fine. Okay, see, the question is very valid, but then the student should understand that the banks have, say they are on a massive computerization or digitization spree. So these days to reach out to, even a village in Ladakh or Sikkim, you don't really have to establish a branch. Robin sir had said actually some time back that, the branch network he sees only digital. Okay, the branches, the catering to the customer requirement through a brick and mortar branch will not be required. Maybe suppose if that student is an employee of that type of a bank, will be in a position to cater to Chhattisgarh district Bastar, deep remote area, sitting in the luxury of his flat in Mumbai. Okay, so banking will undergo a sea change. The penetration will be high. It all depends on the telecommunication, and telecommunication penetration is really,
So you are on mute right.
okay, I foresee that be a lot of further penetration once the 5G is concerned. Within 3 to 4 years, I can do little bit of crystal ball gazing that there will be no feature phones. Every rural area person, every villager, every farmer will also be having a smartphone, and the banking will be at his fingertips. Thank you.
I want to give an example, madam, if you allow me to do so, just for the students to think about it. If you look back 5 to 6 years before, if you want to go on a holiday, you had to go to a brick and mortar travel and tourism office. Let's say Thomas Cook, Raj Travels, to go and say, "Humko ek ticket de do, Baba. I want to go. I want to go to Germany. I want to go to US." Today, you sit on your computer and go to Make My Trip, and you book. You don't need to see the face of Thomas Cook. 4 to 5 years back, did you see how many Raj Travels, Thomas Cooks, and all these shops were around, travel and tourism? Do you see even today? Hardly will see any. All gone, shop closed. There is no branch banking of tourism required because of technology. The only reason where an Indian has to go to a brick and mortar shop in travel and tourism is to get a visa. That's the only reason why still some of these businesses are standing. If Indians are allowed visa-free entry to various countries, as the Americans and Europeans have, all these travel and tourism businesses will close down. Most of them will close down because there is no necessity. The same thing, ladies and gentlemen, is going to have to banking. We like it or we don't like it.
Thank you, sir.
Excellently explained, sir. So there's one question by Shivani Thakkar, and she says that my question is for Robin, sir. So you explained about past and future of banks, but what about present? Present means the amalgamation and merger of banks done. If privatization is the future, then sorry. Yeah. If privatization is the future, then why banks were amalgamated now and not directly privatized? Further, would like to add whether this amalgamation of banks has served its purpose or not.
Present. Present is the day of consolidation. Why? Because there are bad banks and good banks. Now, if the government wants to privatize a bad bank, they're not going to get value. No private company will buy a bad bank. What is a bad bank? A bank which is sitting on a lot of non-performing asset. Loans will not be recovered. Who will buy? Who will give value for that? So what the banks are now doing, government is trying to do, they are consolidating the bad banks to good banks. That's what is happening. In the next 2 to 3 years, like this year, there'll be 2 banks which are getting privatized, which has been already disclosed. Now, in the next 2 to 3 years, you'll find consolidation, then enhancing the quality of balance sheet of these banks, and then they will be privatized. So I said after 5 years, 3 banks will remain. After 10 years, none. You will say, Acha, after 5 years, why 3 banks will remain? Because there is still a necessity for some public sector banks to go and give loans to the underprivileged. That necessity is not going to go away till Indian GDP or per capita income enhances. And in order to do that, that so-called the downtrodden of agriculture, the downtrodden of the MSME loan lending, 3 big public sector banks will remain. Why big? Because their balance sheet will be healthy. They will have the power to give loans, and they will be having the power to take bad debts from some of them who are not being able to pay the money back. This is how the picture is likely to emerge. So today, it is a situation of consolidation so that privatization becomes easier. Sir, with due respect to all of you, irrespective which political party comes, does not really matter. This is economics, and this is what likely to happen.
Yes,
I think I do agree with this observation. Come what may, economics will prevail over the political viewpoint. Yes, ma'am. Nandini, ma'am.
Yes, sir. Thank you, Robin, sir. We don't want political business cycles. We only want economic cycles to rule. There are just 3 more questions. If you all quickly allow me, I will take up those questions for the day and before calling it the day again. Sir, this question is, unlike HDFC Bank and several private sector banks, why nationalized banks are not NBFCs?
Okay, I will try to answer this. See, a lot of private sector banks do not, say sort of indulge into very small ticket businesses. Okay, let's say 20,000 rupee loan, 50,000 rupee loan, but they know that, okay, this business should not be allowed to go to the competition. So they float a NBFC. Okay, non-banking finance company. So for example, HDFC Bank, where I worked for 21 years, they have HDB Finance, which is a 100% owned subsidiary of HDFC Bank, which caters to the small loans and the leads come from them. It's not correct that public sector banks do not have. They have. Almost every major bank has got a home loan company. Okay, LIC Home Finance, PNB Housing Loan, and things like that, SBI Home Finance. So they are also NBFCs. Every major company, major bank is also having insurance business for which they have got a different company. Then AMC, they are all NBFCs. And only thing is that you do not have much knowledge of them. They do not, they are not as successful as maybe HDB or something, but they do have.
Ma'am, you are on mute.
Yes. Thank you so much, sir, for that answer. We have Hardik Shah, young PhD student, asking you a question. Many cooperative banks are shut down in our country. So what is your opinion about the future of such banks?
A similar question has been posed by the Harry Sampath also.
Yes.
Same. Yeah.
If I can answer, Diveshji, quickly.
Please go ahead, sir.
Cooperative banks today have two problems. One, it is largely unregulated. And number two, mostly owned by political parties or politicians, not political, politicians. The government, the Reserve Bank of India, is now all bringing in regulations to treat cooperative banks as normal banks. Essentially speaking, the rigor of disclosures, the rigor of balance sheet analysis, rigor of audit, like RBI does not do a cooperative bank audit. And therefore, they cannot find out that they have given loans which were non-recoverable. Why has PNB Bank fallen? PNB Bank has fallen, it's a cooperative bank, as you know, is because they gave loan to one particular industrial house. 70% of its outstanding went to one industrial house, whereas the cap is 15%, and nobody caught it. So it is this unregulation which has affected. It is absolutely true that I think over the last 5 years, more than 1,200 cooperative banks have fallen. With 1,000 or 1,200, it's a very large number, and Maharashtra is one of the biggest place where cooperative banks have actually fallen because of and large movement, essentially because of the sugar industry and sugar lobby. In my view, the government is trying to but trying to sort out the issue, because cooperative bank is small bank. They're able to garner the money from small lenders, and it is a necessity as of now to have that bank, but regulated. It cannot be used as an arm of a political party or politicians. So this is a situation. It's all because of regulation. Once the regulation gets sorted, I think cooperative banks will also fall in line.
So there is absolutely one last question that I'm taking up now. And that is, if banks are privatized, will the service charges be bearable by the common man? And if a deposit like rupees 5 lakhs is kept in a private sector bank, will it be safe?
I can respond to that.
Yes, sir,
See,
please.
the DICGC coverage, which was either to 1 lakh per depositor per bank, means if a bank fails, you are insured per depositor per bank. If I have a account in, say, State Bank of India or ICICI Bank, my deposit to the extent of 1 lakh were insured with the DICGC, which has been recently raised to 5 lakhs. So that is the coverage provided by the DICGC for any deposits. So in terms of the concern over the bank failures or any problems, so that is the coverage per bank per account 5 lakhs are given. As far as the service charges are concerned, obviously the service charges, whatever the private sector banks, what I feel comparatively, the service charges for the private banks compared to PSBs are little on a higher side. Maybe they compensate in terms of the efficiency or ease to the customers. But yes, there is a little higher service charges. And obviously the customer would have to bear those higher service charges. Hope I addressed the two concerns.
Yes, so that was crystal clear. Over to you, Anubhuti ma'am.
Ma'am, questions are coming up, but yes, I think this one from Sanjay Tracy. All banks need to be regulated with high levels of corporate governance. That's not a question, actually. Just 1 minute. all banks need to be regulated with high levels of corporate governance, whether public or private. Welcome the discussion. Regards. And this is not a question actually, just a
it is a reaction
comment here.
actually. Yes,
yes, a reaction. Yeah,
yes,
yeah.
that's
Yeah,
It's
I
a
think,
statement, yeah. Okay, fine.
Ma'am,
yes.
there is one question more, I think, but with the questions will keep pouring in. I think the students have really gotten into the mood of asking a lot of questions.
Asking,
If
yes.
banks open IPO, then what terms should be given to them?
If banks open IPO,
Yeah.
means
Initial
if
public offer.
Public
If you want to
offer,
become
initial
private.
public
yeah.
offers.
listed,
Then what
Nandini,
terms should?
every bank is listed in any case. It is a mandatory thing to get listed. So, and who are not listed within 5 years of their existence, they have to get listed. So now we have all the small finance bank one by one getting listed. So this is a mandatory requirement by Reserve Bank of India and SEBI that 25% you have to dilute in 5 years time. So I mean, there's hardly any bank which I know of which is not listed.
And IPO is a function of valuation. So, and in banking parlance, there is a way by which you can value an asset. A bank can also be valued. And IPO is always a question of valuation. I presume this is not somewhere we need to discuss how the bank is valued. But there are various methods of bank value, including net book valued asset, which a bank owns, which is another number of times the book value of an asset of a bank is also a method of valuing an asset. So IPO is always with regard to the valuation and the perception of the share investors as to what is the right value. It is actual valuation done and the perception where the amalgamation of the two and the right value of IPO comes. That's how it works all over, whether it's a bank or Zomato or a Paytm. Doesn't really matter.
Now, trust me, this is absolutely the last question we are taking up, people. Nowadays, with low rate of interest in bank FD, one should go for FD or share market or debt funds.
Divesh, this is for you.
Request you to respond to that, sir.
This student seems to be a share market player, so that's why he seems to have asked it. Yes.
Appetite of the investor. So obviously, if he has a very high risk appetite, and he can go for the share market, but if he is conservative and he wants to protect his principal, he can definitely go for the bank FDs, which will give him a reasonable return.
Yes, it's about
50% share market, 30% debt, 20% FD. Yeah. That is a good mix. 50% share market, 30% FD, sorry, debt and 20% FD is something which you can look at. But it all depends, as Ishwarji said, what is your risk appetite? Based on that, you should have a portfolio.
Yes, whether you're risk adventurous or whether you're not adventurous. Yes, those terms. Right. Anubhuti ma'am, back to you.
I think, ma'am, over to you. I am getting a lot of questions directly, like just to me, but I think we have been able to actually that curiosity amongst the children that has really been sparked off, I can say, and we really do not see them interacting so much when we are taking up their lectures. So here I can see that they are all really coming up with a number of questions. Really a very, very good session, I must say, and what we say, hearing from the horse's mouth, this is something like, getting to know exactly from the bankers, that's something that is really good. Ma'am, Nandini ma'am, I would want you to
yes,
like officially go for the vote of thanks.
Yes. That was absolutely the mood set for the day.
Ma'am is also there. We have Bhushan ma'am also
yes,
again.
I will just say one sentence. A very healthy, wealthy and wise discussion took place. Wealthy not in terms of money, but wealthy in terms of knowledge. Thank you so much, all the respected panelists, I must say. Very interesting session. Thank you so much.
Thank you. I'll quickly propose the vote of thanks as a part of the tradition. On behalf of KES Shroff College, I deem it my privilege to propose the vote of thanks today. I would like to express my special gratitude to our today's guest speakers, Mr. Robin Banerjee, Mr. K. Ishwar, and Mr. VISHWAS UTAGI for sparing their valuable time and for enlightening us. My sincere thank you to Mr. Divesh Ishra for being a very sharp moderator for the panel and as always being a part of KES family. Our thank you to our principal, Dr. Lily Bhushan, for her guidance, support, vision, and commitment throughout the year and years to come. I thank our Vice Principal, Dr. V.S. Kannan, who is always omnipresent. My sincere thank you to the ever supportive KES management. I will fail if I don't thank the coordinator of banking and insurance and the brain behind this event, Ms. Anubhuti Singh and her colleague members, Ms. Florence and Ms. Charushila for being here today. Thank you to my colleagues who are in today for this event, for this panel discussion. The event will never be complete if the professors and dear students who have joined in today, all of y'all made this event a very nice event at the end of the day. My big thank you to Rashi and Mr. Arvind Harekar for handling the social media and of course for designing the flyer for the day. And if I have missed out anyone, then my thank you to them also for being over here. And elite gentlemen, you definitely set the mood today. We forgot the rains outside. We forgot the problems that are there outside. And Mr. VISHWAS UTAGI, let me take this pleasure to also tell you that my husband was also enjoying a little bit of what you were talking. And he remembered you in those days when y'all were together. Okay. Thank you. Thank you so much.
Thank you very much.
The feedback link is in the chat box, students. Please fill it up. It is for y'all. And we'll get back to you all soon. So, Anubhuti ma'am, we could officially get the curtains down if you say.
Yes, with the permission of the other panelists also. Thanks a lot if now we can end the meeting. Thanks a lot. It was really an interesting session.
Thank you and stay safe and good day. Thank you all so much. Thank you.
Thank you.